Hey traders and investors, it's Serge Berger here. Today, I want to have a look at the Russell 2000 again. I got a lot of questions on it the other day because it really is a crucial index to watch, and a lot of people are pointing to it how it's still underperforming year to date, which is very true. So let's have a look at it. Here's the S&P though quickly, and you'll note the S&P is up about 9% year to date, roughly. If we flip on over to the Russell, which is a much better indicator of the U.S. domestic economy, you can see as a blue line here, it's flat. So the S&P, the Russell 2000, has sort of gyrated up and down and up and down, but it hasn't done anything year to date. So the two things to look for are more well. There are multiple things to look for, but I think the most important thing to understand is that this divergence between small caps and large caps can be anywhere between 3 months to like 9 months. Okay, we've had this divergence now pretty much all year, so we're really getting to the very late stages of where this should still be a leading indicator. So now we have two options, okay, and the bears are gonna love this. We still have this double top, right? So the top in February, yeah, no, early March, and then the top in July. That sort of double top formation has is still intact. The problem is the longer that the index gets stuck here. So this is through a purely technical lens. The longer the index is basically stuck between, let's call it 11,000 1140 and about 1180. The more it's going to frustrate the bears, and ultimately it's really possible that we then retest the highs. And if we retest these highs near 1200, we're going to go higher. Okay, and that's just the bottom line. So what's really important here is to continue to respect the fact that the rest of the market continues to trend higher. Okay, so shorting the Russell 2000 isn't really the best thing to do here just yet. We need to see real price confirmation. We have not seen price confirmation of the broader indices breaking down. Even the Russell, it's been very difficult to short, other than either be very quickly, or you manage to sort of get top here in that I just pointed to. So just because we are in a seasonally weak period and at the end of the cyclical bull market, which I believe we are, you know, it it doesn't mean you just blindly short the market. So look for the Russell, but look for the Russell to short when you start to see the market turn down, but wait for confirmation. We need to see things like the banks start to really get weak. The BKX is a good one to watch, and you can see the banks actually broke very meaningfully higher here the other day. Yeah, like last week. Look at this. Okay, so please continue to respect the trend. I do hear the bears, absolutely, and I'm going to love to play this market in short side when it makes sense, but staying long this market has been the prudent thing to do because there just hasn't been any real sell pressure. Any dip that we get, is short lived. The S&P, we did play that dip in late July, early August. But then we also very quickly flipped back to the long side, just because it was very strong the way the things were. The market was bouncing, and particularly by the banks and the transports. So please don't blindly short the Russell 2000 until we see weakness in other places. Hope this makes sense. If you got any questions, as always, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.